Investment firms that focus on ESG, that's environmental, social governance, promise you can get rich and do good at the same time. But in reality, it has been a losing investment strategy that threatens our economy and people's savings. Andy Puzder took fast food giant Carl's Jr. and Hardee's from the brink of bankruptcy to a multi-billion-dollar company. He warns that ESG is one of the most dangerous things happening to America today. Find out why. I don't know if you remember this, but the first conversation you and I ever had a few years ago went something like this. Hi, Andy. I'm really worried about this thing, ESG. Have you heard of ESG? I think we need to make the public aware of ESG. And you said to me something like, boy, am I aware of ESG and I'm really worried about it. And then you and I went on I don't know if you know this actually, but you and I went on a little campaign with the PragerU team to explain that it's actually a really important thing and we need the public to be aware of it. We had to do some campaigning because people didn't realize how dangerous ESG will be for our country. And I think I had the instinct that it's a big problem because I experienced BDS, boycott, divestment, and sanctions against Israel. And it sounded very similar to me where they conflate all these ideologies, oftentimes lies, in order to put economic pressure on whoever it is that they wanted to pressure out of business, right? Or with the country of Israel in particular. And so my antenna went up when I heard that ESG is used against America because I've seen that before. And your antenna was already up. And so I'm so excited to have you on because first of all, we get to say, I told you so.
We were right. Yeah.
Let's not, we wish we didn't, but we were right. And I'm glad that we started warning people. And you have really become an expert in ESG. And before we get started, because I want to spend most of our time talking about that and continuing to warn people about it, I want people to get to know you a little better. I got to know you behind the scenes, and now we finally get to capture this conversation. So let's go back in time to who is little Andy? Where did you grow up? What kind of a kid were you?
One thing on this ESG issue before we go on. After that, we had these conversations and Alan got involved. We came up with that 5-minute video on ESG. And I've done, 4 or 5 videos, and some of them gotten a lot of views. This has gotten about 3 million views, which is less than some of the other ones. Still a lot of views, but less. I hear more about that ESG video than I hear about anything. And I think it's because working with you and Alan, the statement of ESG in that 5-minute video is so clear. And I think people didn't know what it was before. I hear from legislators, it's not just college kids that watch these videos, but I hear from legislators, I hear from policy people about that video. So thank God we did that. I grew up in Cleveland, Ohio, working class kid. My father's parents came to this country from the Austro-Hungarian Empire in the early 1900s, looking for freedom and opportunity, like many immigrants before and after them. My father was a World War II combat vet and a Ford car salesman when I was growing up. We lived in a little ranch house in farm country outside of Cleveland, Ohio, a place called Chagrin Falls. I went to a public high school and worked my way through whatever I had to work through. I started out cutting lawns. I scooped ice cream at a Baskin-Robbins. Ended up going to college at Kent State University. I went for 1 semester after the famous shootings. Then took 3 years off to play in rock and roll bands. And then I went and spent and finished up at Cleveland State University in downtown Cleveland. Worked in a music store, but I busted up concrete with a jackhammer and threw the chunks on the back of a truck when I was in law school. I painted houses, cut lawns, whatever, any kind of dirty job you can think of. Because I had no family help and no government help. I didn't really qualify for any government help. So I worked my way through, went from Cleveland State to Washington University in St. Louis, got my law degree, and went into the practice of law in 1978.
How did you pay for law school?
Working. I had saved, playing in bands, I had saved up about 10 grand. And tuition at that point, it doesn't sound like much now, but it sure sounded like a lot then, was about $1,500 a semester. And my ex-wife and I then talked about, well, should I go to law school or should we buy a house? And we just, let's put the money aside. Let's get through law school and see where that goes. So I think I had a wife and 2 children, 2 boys at the time, and my former wife, was pregnant my senior year in law school with our daughter, who was born just after I graduated. So it wasn't easy. It was hard, and there were a lot of kids in my class who were being put through by their parents. And there were a lot of others who were being put through by the government. I didn't resent it then. I don't resent it now. I think I got to work my way through, and you get something out of just doing that.
Yeah, absolutely. There's a recurring theme with CEOs and entrepreneurs that I happen to speak with, and that is adversity, right? Childhood was not easy. You work your butt off from day one, and you got a lot out of it. And I think people oftentimes think that, great CEOs have come from immense wealth and privilege. And actually, the common theme is that it's not the case, that it's actually the adversity that builds you. And I think there's something so encouraging about that, because that is the American dream, right? And that
Yes.
is that we don't necessarily have to come from wealth. And oftentimes coming from adversity is a very positive learning experience. While negative and painful, we just build those abilities.
Well, it's tough when you're going through it, but when you look back on it, you're like, I did that. And it gives you a sense of pride, a sense of accomplishment.
Sure.
That I think you never really experience if you don't go through that kind of adversity. So it is important. I mean, I think CEOs are generally people that were hard workers. They were passionate about their objectives, and that passion has generally paid off for a lot I
Mm-hmm. How did you become the CEO of Carl's Jr. and Hardee's?
That's an interesting story. I was a trial lawyer for my first 15 years in the practice of law. I tried complex civil litigation. And I went from there to representing rich guys. It was, I had some clients that were very successful. Carl Karcher was one of them, and Carl was the founder of Carl's Jr. I represented him in a lawsuit. His lawyer retired. We got to be good friends. He and I shared a lot of values. He's Catholic. He was very pro-life, very Republican. He was a huge Republican in Orange County, California. Was friends with Reagan, friends with Richard Nixon. Just a real interesting guy. You should do a section on him. He was 8th grade education, buys a hot dog cart. By the time I meet him, it's a $500 million public company. But his lawyer retired. He asked me if I wanted to become his lawyer, and I agreed. It turns out he was in serious financial trouble. I spent a couple of years getting him out of trouble. And then another client of mine, a guy named Bill Foley, who was the chairman and CEO of Fidelity National Financial, which is it's now a Fortune 500 company, might even be a Fortune 400 company, but the largest title insurance company in the world. And I worked with Bill and Carl. We got Carl out of trouble. Bill brought me in as general counsel of Fidelity, and then brought me in as general counsel of Carl's. And Carl's Jr. Was in the process of buying Hardee's, which is a fast food chain in the Midwest and Southeast. Carl's was just in the West. The idea was that they would have this coast-to-coast brand. So he brought me in as general counsel to put the deal together. I generally was doing deals at this point for Fidelity or for CKE, for Carl's Jr. And so we bought Hardee's. I negotiated the deal in New York, went to Rocky Mount, North Carolina, where Hardee's was located. Hardee's at that point had 12 lawyers. They needed 2. So I fired 10 lawyers. And the operations team was having a meeting. It was a conference room table, and Bill Foley was there, and Tom Thompson, who was CEO, and a group of people from Carl's Jr. were talking about how they're going to fix the brand. I had nothing to do, so I went to the meeting. And I knew all these people because I'd represented Carl now since I started representing him full-time 1989 or 90, and this is now 1997. So I'd known the people a long time. And they're all around the table talking about, well, we're going to turn Hardee's into Carl's. We're going to change the name to Carl's Jr. Everybody loves Carl's Burger. We put our burgers in. We'll have Hardee's breakfast. I looked around the table. Nobody at that table had ever lived in the Midwest or Southeast except for me. I lived in the Midwest and knew Hardee's. And I said, I don't think it's going to work. Everybody kind of looks, what's the lawyer? Why is he opening his mouth? I said, I don't think it's going to work. I said, none of you guys ever lived in the Midwest or Southeast, and Hardee's as a brand name. And I think people are going to say, who the heck is Carl Jr.? And I cleaned that up a little bit. Who the heck is Carl Jr. and where's my Hardee's? And they all laughed and said, Andy, go buy something, good stuff. So I did. I did a deal where we bought Chicago Title and merged it into Fidelity. And over the next 2 to 3 years, that the stock in Carl's Jr. went to $42 when we bought Hardee's. And by and now it's the year 2000, so it's about 3 years later, and it has dropped to 2 because they tried to turn Hardee's into Carl's Jr. in 2 markets, Oklahoma and Peoria. Oklahoma was still the worst performing Carl's market in the system when I stopped being CEO, like 20 years later. And Peoria had to be turned back to Hardee's or closed down. So I walk into the shareholders meeting. I'm the secretary of the company, and the stocks dropped through the tank. And a lot of people showed up at these meetings. Carl was kind of a star back in Orange County. So people would show up to the meetings, and like 400 people, teachers who had invested their retirement funds in Carl Jr. were upset. But I'm thinking, I didn't do anything. I told them not to do this. I'm thinking, what joke I'll tell while they're counting the votes. And the directors are meeting in the corner, and they go, Andy, come here. Bill Foley says, Andy, come here. So I went over, and he says, you're going to be the president of Hardee's. And I said, excuse me? So I'm going to be what? He said, and Byron Allenbaugh used to run Ralph's Markets, came over and said, no, Bill, look, Andy's going to be president and CEO. You had your chance. If he's going to be president, he'd be president and CEO. Wow. Bill laughed and said, Hardee's was in the tank. It was in real trouble. He says, you're going to be the president and CEO. I said, why? He said, well, you're the only guy that knew this wouldn't work. So then we had the shareholders meeting, and they introduced me as the new CEO, like we'd done a nationwide search or something, and I was the only guy qualified for the job. And so that's how I got to be the CEO.
Were you okay with that? Or were you like, leave me a minute to think about the offer?
Seemed like I was supposed to do this. Carl was like a second dad to me. I mean, he was my client, but he and I were extremely close, and he was in trouble. The company was in trouble. Everybody's in trouble. And if they say, let's see if the cocky lawyer can fix it, And you have to kind of say yes when you're so called to do something like that. So for about a week, I was worried. I remember sitting in Rocky Mount, North Carolina at the headquarters, and I started visiting restaurants as soon as I took over. And I thought, for about a week, I thought, I think I can do this. Everybody thought I was going to take it into bankruptcy because it was basically bankrupt.
And you were a lawyer after all.
Yeah, and I'd been a deal guy. They thought I'd either sell it or take it into bankruptcy. But I realized very quickly that taking it into bankruptcy would have hurt our employees, it would have hurt our franchisees, it would have hurt our investors, the banks that lent us money. Nobody wanted to buy it for anything any price you'd sell it for. I said, well, what the heck? We'll see if we can fix it. And I say after about a week, I think I can do this. So it worked out okay.
How long were you the CEO?
17 years.
Wow. So what are the things that you had done to fix it?
Well, the first thing was getting in the restaurants. And this was, the guy who was running it before me, he started as a fry cook at Carl's Jr., worked his way up to the top. They put him in charge at Hardee's. And I think he got in there and said, restaurants don't have to do that anymore. What's going on in HR, legal, and accounting? No more restaurant stuff. And I get in there and said, I know what's going on in HR, legal, and accounting. I don't care. What's going on in the restaurants? That's what scares me. And I started to visit the restaurants and realized that the service was really bad and the restaurants were really dirty and the menu was too complicated. So we came up. The first time I went into a Hardee's, I was across from a young lady, and she was looking at me, and I was kind of like what we're doing now, except I wasn't talking. Neither was she. I wasn't a restaurant guy. I'd never worked in a restaurant, but I thought maybe she should say, hello, welcome to Hardee's. May I help you? So I got rid of the management people at Hardee's that had come over from Carl's and brought up some Hardee's people that were familiar with the brand. And we put together a 10-point 10-page booklet on how you run a really good restaurant. Because I would go in the general manager's offices in these restaurants, and they'd have a notebook like this thick that would say, how you run the perfect restaurant. Didn't really say that, but that's what this notebook was, right? And I'd gone to school for 19 years. I was lucky if these people graduated from high school. I wasn't going to read it. Neither were they, right?
You're like, where's the 5-minute version?
And the inserts that come out monthly are like on the floor. They're on they're unopened envelopes. So I said, let's instead of the perfect restaurant, let's come up with something that says, here's how you run a really good restaurant. We did. It improved the service. Then I knew the menu was too complicated, so I talked to the marketing guys from Carl's Jr., Richard Zion and Jordan Mendelson. Mendelson Zion was an ad agency that had done a lot of Carl's ads. And I said, would you come and look at Hardee's? And they said, no, we won't, because Hardee's is a disaster. We were asked to do it when you bought it. And if we come in and do a great ad, people are going to just come in and see how bad it is. and then the sales will go down, we'll get fired. I said, well, go look, because I think maybe we addressed those issues. About a month later, they came back and said, you addressed the issues and we'll work with you on this. They took a month off and came back, and Jordan Mendelsohn, who's this very creative guy, he ended up doing some famous ads we had, like with Paris Hilton and Kate Upton, these really business building ads that you couldn't do today, but back then you could do them. But he comes in my office and says, okay, I've got the solution for Hardee's. I said, what is it? He said, we're going to tear down the buildings. We're going to change the name to Thick Burger. We're going to get rid of breakfast. I said, Jordan, I like this idea, except for the parts where we change the name, tear down the restaurant, and get rid of breakfast. I said, but this Thick Burger idea could work. So we put in the Thick Burgers, we fixed the operations, and that's the Reader's Digest version of how we turned Hardee's and Carl's Jr. from company that was almost bankrupt into a very successful company. Did $4 billion in revenue worldwide. My last year, we had restaurants in 45 states and 40 foreign countries.
Amazing. Yeah. What are some of the biggest mistakes you've made there?
At Hardee's, my biggest mistake, I think, was at Carl's. I had a great team. I will say I think probably the thing I did most effectively was hire good people and let them do their job. And that's a good lesson for being successful. Hire good people, let them do their job. What happened in 2015, our ads were still working, our products, but not as well as they had been for the prior 17 years. We had 17 years of average unit volumes. That's how much sales you do per restaurant. And it looks like this. It's a wonderful, going back and looking at such a nice chart. And who knew we were going to end up doing that? But about 2015, I knew what young, hungry guys wanted that was our target market, was young, hungry guys. Young guys, 18 to 34-year-old males, buy about, 45% of all burgers go to that group of people. So I figured nobody else targets them. Like McDonald's targets women, kids, and families. Wendy's targets kind of older people. I think, why don't we target the most prolific group of burger purchasers? So we did, and it seemed to me things were starting to change. Like, I really kind of didn't know what millennials wanted. Like, it used to be I'd go into a marketing meeting and they say, here's 3 ads we could do. And I'd say, we'll do 2. Or here's 4 guys or 4 gals that we'll put in an ad. I'd say, we'll use him and her. And I noticed in 2015, I was starting to kind of lose touch with, I went to, this was what brought it home for me. I went to a marketing meeting and they said, here's the 3 ads we could do. And I said, well, what do you guys think? And then I knew I was done. So I contacted the private equity firm that owned us at the beginning of 2016. And I said, I've been doing this, 16 years. Maybe we should find somebody else that can come in and do this. And it didn't work out. So the transition wasn't as smooth as I have liked it to be to the new. And plus it took till April of the next year. So from January of 16 until April of 17, I kind of was hamstrung because I didn't want to make major changes because I thought a new person would be in by June or July, but it took them a longer time to find a new person than I thought it would. So I really couldn't make major changes. And I think I probably should have insisted they find somebody quickly, or I just should have toughed it out and figured out what was going on. One of those two. But anyway, it was a great 17 years. Had a lot of fun.
What did you do after you left? Did you retire?
Well, immediately, I retired in April of 2017 and started doing, I'd always done some speaking and some writing. I love to write for the Wall Street Journal or Real Clear Politics or Fox or National Review. So I could continue to do more of that. First, I was nominated, President Trump had nominated, much to my surprise, President Trump nominated me for Secretary of Labor. So that took from December till probably March. I think I withdrew my nomination in March. So that took that period of time up. And then I just, I was retired and had been successful. We took the company private in 2010, which is when you take a company private, if they keep management does very well. They kept us, and then we sold to another private equity firm in 2013. So I was in good shape financially. I didn't really need to work. And I liked the speaking and I liked the writing. So I just continued doing that.
Are you case talking about what happened with your nomination for Secretary of Labor?
Yeah, I made a big mistake. I did make a mistake, a huge mistake. My ex-wife in our divorce had alleged that I had been physically abusive back in 1986, 87. I was very active in the pro-life movement. She hired a lawyer whose wife actually worked at the abortion clinic that was against me in this case that went to the Supreme Court. I wrote a law declaring that human life begins at conception that the Supreme Court upheld in a case called Webster versus Reproductive Health Services in 1989. And Reproductive Health Services was obviously on the other side of the case fighting the law that I wrote. And she had a lawyer whose wife was worked at that clinic. And she did it on purpose. She wanted somebody, she did not have a college education. She was concerned. Here was a lawyer. I was fairly well known in St. Louis. We're getting divorced in St. Louis. So I wasn't mad at her about it. But
she wanted somebody who can really fight for her.
And she later regretted it. And she wrote that she had made those allegations, and she admitted within a couple of years that they just weren't true.
And what were the allegations? I don't know.
Just that I was physically abusive to her. That we had had a fight like the night that we decided to get a divorce, and that I had been physically abusive, which wasn't true, and which she says wasn't true. It's not.
Right.
I think it's tough to defend yourself when it's just he said, she said. Try defending yourself when nobody's accusing you of anything. This is the situation I was facing when I was there for Secretary of Labor. Was the Democrats were making a big deal out of this because of the Me Too movement and everything was going on. And so my wife filed a statement with the committee that was considering my nomination saying, look, it wasn't true. He was a great guy. He's a great father. We're still very good friends. She would come over for holidays, with my wife and our mutual, I've got 3 sons with my second wife and 2 sons and a daughter with my first wife. And we'd have holidays together. It was just, none of it was true. And it was way in our past. She'd admitted it like 30 years ago. But I mean, the left just, they hammered it and hammered it. And the newspapers would cover it and say, she accused him of being abusive. He's this terrible, abusive guy. And then at the end, and then at the very end, at the bottom, it'd say, and she later recanted, with like, but they would just keep repeating it with and she later recanted. And I wanted to go on TV with Lisa. Lisa was saying, everybody's out there saying, believe the woman. Why doesn't anybody believe me? This never happened.
Right.
And so let's go on Fox. Let's go on TV. Let's go somewhere, with somebody and do an interview. And my wife Dee said, I'll do it too. Let's just go on. And but the people that were handling the nomination process in the Trump campaign said, no, that's. Don't go on TV. You got a lock on this.
Don't defend yourself.
Don't worry about this. We got the votes, and if you go, and I think it was because there were other, I had been a trial lawyer. I had done a lot of TV for years and was doing a lot of interviews on Fox at the time. So I was very comfortable. But there were some other nominees who they thought might want to go on TV if I did it, and they didn't want them going on TV because they weren't particularly proficient at it. So anyway, so they said, don't do this. You got a lock. If you do go on, you're just going to hurt yourself. So I didn't go. And that was not a good move. I should have gone on and with my ex-wife and my current wife and said, and let them talk, and if they ask me questions. So anyway, that was my mistake, was I didn't sufficiently defend myself. I listened to
came after you with everything they could.
Now, President Trump was great through this. I think if I'd have gone, and the other thing is I didn't go to him. I should have gone to him and said, I want to defend myself. He would have said, sure.
Yeah.
Because I did go to him and say, look, when this started, I went to him and said, look, I'll just resign. I'm doing this because I wanted to help you, not because I wanted to hurt you.
Right.
And he said, nope, you can't resign. I even said it to the press after I left. He put it like, nope, Puzder's not allowed to resign. You can't withdraw your nomination.
Yeah.
So I said, okay, so I'm in. And then I got a call that I had lost. You could lose 2 votes, but if you lost 3 votes, then Vice President Pence couldn't give that tie-breaking 51st vote. And I had lost. I knew I wasn't going to get Collins and Murkowski, although I got along with them very well. I didn't think they were going to vote for me. And then I lost. Is it Johnny Isakson from Georgia? He was a senator from Georgia, and I to this day I still don't know. But he said he wasn't going to. Well, then once you lose that 1 extra vote, then you're done. And other people who, just want to protect themselves start saying, well, I wouldn't vote for him either. So I didn't have the votes because I lost Johnny Isaacson, which irritated a lot of people in the Republican Party. But he's passed away since, so I'll never know what was behind what was his motivation.
My reaction to this is that so many people are telling others not to fight back, right? It's like, oh, just, lay low, don't fight back. I mean, you see this a lot in the business world. It's like, don't stand for your values, just, be quiet, focus, narrow, on your narrow job, don't worry about it. And, every single time it ends up being a mistake. Every single time somebody apologizes for something they don't actually want to apologize for, every time they don't fight back when they're being attacked, they actually end up losing. It actually does make sense, right?
Yep.
Like if you're not going to defend yourself, then you're going to end up losing. And I think it's such an interesting lesson across the board because you're seeing a lot of folks in business. And again, we'll talk about ESG and wokeism, but that is a big part of the reason why the left is gaining so much momentum because they fight nonstop. And we are told that we should not fight back. And we are told that we should be quiet by whatever consultants that actually don't have nearly the type of experience that somebody like you would have, who knows that actually you do need to run against the herd sometimes to be seen.
And this is so contrary to my nature. And it really was frustrating. I mean, it was a very stressful time, not so much because of the attacks. I mean, I expected the attacks. And I told the president before, once he asked me to do this, I said, look, I'm going to get attacked for this. There's a lot of stuff they're going to come after me on. But I didn't buy it. But it was frustrating not to be able to defend myself. Right. And I should have not listened to the powers that be.
Yeah. Well, and the other frustrating thing is that you actually had a plan. You actually had a vetted plan. You had a good plan. Well, I sounded like a good plan, which I'd love to hear more about it, before you were nominated, which I think is somewhat rare for politicians. Politicians are very much focused on getting elected and, getting the donations in and getting all the votes in and all of that. But you actually took the time to write a plan. And I would love to hear, what was your plan? If you would have been elected as Secretary of Labor, what would that look like? What kind of changes would you make? And if you can also just explain to me what ended up happening with whoever came in instead of you. Did you see that plan actually come into fruition? And fast forward several years later, what does it look like today?
Well, I think Alex Acosta was the individual who came in. He was the nominee after me and was approved. And of course, he had problems later with the Jeffrey Epstein issues. But he got some of it done. I think what I would have done that he didn't do, but Gene Scalia did do. Gene Scalia was the Secretary of Labor after Alex Acosta. And Gene got a regulation through on ESG investing, environmental, social, and governance investing, that said when you're under a federal law called ERISA, the Employee Retirement Income Security Act, that governs pension funds and 401k plans. He said, your obligation under ERISA, if you're a fiduciary, a trustee, or someone who's responsible for investing the funds of the beneficiaries of these pension funds and 401ks, in other words, retirees, people that have worked their whole life and just want to have a comfortable retirement, your obligation is to maximize the financial returns for those individuals. You can't, and the law was passed because like the Teamsters, and it was really a reaction to the Teamsters pension fund, because they were investing in hotels in Las Vegas, which turned out to be a good investment, I think, long term. But at the time, you didn't know it was going to be a good investment, and they were doing it to try and help their friends. They weren't doing it because they thought it was the most productive thing or the safest thing to do for the truckers who were retiring in the Teamsters pension fund. Well, this ESG is kind of the same thing. It's you're investing to accomplish these social and political, these leftist social and political goals, not to maximize returns for investors, which is not what people normally expect. You expect the people that are responsible for your money to maximize your returns. I would have had a regulation passed within the Department of Labor, as Gene Scalia did in 2020, that made it clear that ESG investing was inconsistent with fiduciary duties under ERISA. And that would have had an impact on investment firms like BlackRock, State Street, Vanguard, these large investment firms that really invest trillions of dollars. It really would have changed, I think, the criteria pursuant to which they could have invested funds. Gene, he was a great Secretary of Labor. He got it passed. He did get that through, but it was near the end of the Trump administration, so he really never got the opportunity to enforce it. Had I been not, I would have got it through the first year, like he got it through his first year. But my first year would have given us 3 years then to try and enforce that regulation. So I think we could have made a lot of progress. You know, when President Biden's team came in, they just said, look, we're not enforcing the Scalia regulation. We're going to put in our own regulation. And there's been a lot of press about this regulation they passed that says, oh, yeah, you can invest people's money, these 401ks or whatever. You can invest those monies to achieve these political ends, which really is inconsistent with traditional notions of what a trustee should do for the people that they're representing, and inconsistent with the language of the Employment Retirement Income Security Act. So I think I could have gotten that done. I think that would have been a major accomplishment. A lot of the other things the Trump administration pursued, whether I would have pursued them as or more aggressively or or more successfully or less successfully, we'll never know.
Well, it's very convenient for the left to have these funds support their agendas, their political agendas, right? So,
well, that's why, of course, why else would Biden be out there?
Right.
He wouldn't be doing this if the funds were being invested to pursue conservative goals.
Yeah.
But they're not. They're invested to pursue these far leftist goals.
Can you explain ESG? What is it exactly?
Well, ESG, as I said, stands for environmental, social, and governance. And environmental, that's pretty easy. You would vote against perhaps companies that are in the fossil fuel sector, or you could do what BlackRock and State Street did with Exxon back in 2021. Is you own these shares, you hold these shares on behalf of the beneficiaries of all these pension funds. You know, you're investing their monies. They went in and voted those shares in support of a group called Engine Number One, which was a small hedge fund that wanted to put environmentalists on the board of directors of Exxon, the country's largest oil producer. And because they control so much stock, if you take BlackRock, State Street, and Vanguard, the 3 largest investment managers, and you combine their holdings, so you treat them as one investor, they'd be the number 1 shareholder in 80 to 90% of the companies in the S&P 500. And if you just look at BlackRock alone, which is the largest, it's the first, second, or third largest shareholder in 80 to 90% of the companies in the S&P 500. So they vote those shares, which is tremendous power. And in this case, they voted those shares in favor of putting the environmentalists on Exxon's board, and they sit today on Exxon's board. And it really is an attack on our founding principles, environmental, social, and governance. It sounds so good. How bad could that be? Well, it's a ruse. It's a ruse to confuse you so you don't know that it's an attack on our founding principles. It's an attack on our representative democracy, on our economic freedom, and on our individual liberty. It's an attack on our representative democracy because these large asset managers use their tremendous voting power to compel CEOs to implement these leftist policies that they can't get past at the ballot box because they're just not popular. So it's a way around the ballot box. It's a way around our representative democracy to implement leftist policies. It's a threat to our economic freedom because they pressure the CEOs of these companies, not only to implement these policies, but to put implementing the policies above their obligation to generate returns for their investors, which is their traditional obligation. And it's a threat to our economic freedom because they use our money to do it. If you've got a pension fund, a mutual fund, a 401k, they're using your money to advance these leftist policies. And it's a tremendous amount of money. The last I heard, BlackRock alone has about $10 trillion in investments. If you combine BlackRock, State Street, and Vanguard, the assets they hold are about equal to this country's GDP for a year. I mean, this is, and they're not the only ones. I mean, there's 60 to 150 trillion dollars in assets across the globe of funds that are pursuing these leftist political objectives. So this is a huge threat, and it's something that people need to be aware of and are increasingly aware of it. I mean, I'm surprised. You talked about our conversation a couple of years ago. I thought it was going to be like the pro-life movement where you need 50 years to solve the problem. In a couple of years, people have risen up and said, this is wrong. You can't use my money to do things I don't believe in. And that's exactly what's been happening.
I mean, the example you give of Exxon, I'm just trying to understand this. So you have board members on Exxon that actually don't believe in the value of fossil fuels?
I can't say that they don't believe that fossil fuels have value, but they were put on the board by an environmentalist hedge fund who knew who they were nominating to that board and nominated them because that environmentalist hedge fund wanted to change Exxon's business model. So, and I will point out, Exxon was extremely profitable the last couple of years because for the 4 or 5 years before the Ukraine war, before Biden was put in office and made it very well known that he was going to cut back on our domestic energy production. We were the largest energy producer in the world prior to Biden, and we were the third largest exporter of energy in the world, which kept oil prices way down. Well, with Biden taking office and saying, look, I'm going to no pipelines, no permits, no leases, or at least enough to maybe make the press think he was, that they could argue that he's trying to do the right thing when he's really not. He's really not doing what he should do. What he should do is stand on the steps of the White House and say, the world needs oil, America needs oil, we need energy prices to come down. Environmentalists, get out of the way.
Right.
We're going to go forward with oil production. He doesn't do that. Exxon, for 4 or 5 years, when energy prices were very low under President Trump, they invested a lot of money in oil production. Well, they're now collecting on that because a combination of Biden's policies and the war in Ukraine have really cut the world's supply of oil, which of course drives up the price. Mm-hmm. And if you are a company that has a product that is in short supply, you're going to make a good profit. So the last couple of years, 19 of the 20 top stocks in the S&P 500 last year were energy stocks. So it's been a big turnaround in the market, but Exxon now has a couple of people on its board that may not be encouraging it to expand its production capabilities as much as would have been the case otherwise.
I have to ask why? Why would Larry Fink want more leftism, want more ESG, want limited supply of energy and fossil fuels in America? Well, is there a nefarious? I know that he is an investor in China's petroleum business, and they're fine doing drilling in Africa and in Ethiopia. So why would he want to curtail America's success?
It's interesting. Some of the leases that the oil companies in America have walked away from since all of this ESG hubbubs were taken over by the oil company in China, in which BlackRock has invested. And BlackRock was the first firm to get permission from the Chinese government to invest, to pursue investment activities in China. But they aren't in China telling the Chinese government they need to follow these ESG policies or they should stop building coal plants.
So why is this happening?
I think there's a number of reasons. One is it's part of this World Economic Forum move towards an all-world government, and the alleged climate catastrophe, which I say alleged almost with biting my tongue because they may give it more credibility than it deserves. But this alleged climate catastrophe that the left advances is really a way to get control of people in various countries. They want to use it much like they used the pandemic to implement policies that are draconian. And so he is part of that World Economic Forum group. Now, I don't know him, so I don't know if it's that, or I know BlackRock gets a lot of pressure from these leftist groups out there to abide by policies like the DEI policies, like the ESG policies that support these leftist political goals. And it may be that he believes in them. It's hard to say. And I will tell you that for a time, when everybody starts buying a company's stock, that stock will go up, right? If everybody, whether stocks have value or not, this is what happened in the dot-com boom, right? Everybody bought these dot-com companies and they all crashed. So if everybody's buying ESG companies, when ESG becomes this hot thing back 2016 or 17, Larry Fink came out and said, we need to focus on more than just the profits for these companies. Well, the ESG companies went up because everybody started buying ESG companies.
It's a whole marketing thing.
Yeah, but then your returns go down because let's say they're paying a 10% dividend at $100. Well, if they don't change the dividend and the stock's selling for $150, you're getting less of a return. You buy a $150 stock, you're not getting the 10% return. You're now getting a much diminished return, probably 7.5%. For a while they all went up, but now this last year, beginning at the end of probably mid 2021, the ESG funds just grossly underperformed, and people have lost a tremendous amount of money. Asset values have come way down because ESG funds have gone down. Prior to the pandemic, stock market was going like this. I mean, stock market was up. Even during the pandemic, it was going up again, and at very high values. But it's the ESG funds have not. They went along with that for a while, but now they're way down.
Well, I looked up this chart before our conversation, and there are these charts all over the internet that basically show how ESG funds are not only doing well, but they also do good, right? So you get a chance to get rich and help the world at the same time. And that is the claim that's being made in many business environments. And I think CEOs want to show that they care about the environment and they care about socially govern and governance and all of that. And I think part of it is virtue signaling, where they want to, show that they're great. It's not enough that they make money. But they're also claiming that they're economically profitable. They're financially profitable. So what is your comment on a chart like this in ESG funds?
Well, so this chart shows a growth in the value of the stocks or the assets that are invested. I think this is assets invested, right? Global ESG ETF assets. So this isn't a performance chart. This is how much money's being invested in ESG. So if BlackRock, State Street, and Vanguard are investing in ESG stocks, or are offering ESG ETFs, if this is the kind of products they're promoting and getting people to invest in, you are going to see an increase in the assets invested in ESG. I think the more important question is, how do these assets perform? Mm-hmm. And how do they perform versus the market? Market is generally considered the S&P 500 or the Russell 1000. And how do they perform against stocks that aren't ESG-focused stocks? And we've got two charts on that. The first one is a chart that was prepared based on data from a group called Second Vote Analytics, which ranks every company in the S&P 900 from 1 to 5, 1 being liberal, 2 being leans liberal, 3 being politically neutral, 4 being leans conservative, 5 being conservative. And you can see at the bottom of this chart the blue line is neutral stocks. That's stocks that rated a 3 out of the S&P 900. So they were not politically affiliated. And what we believe based on this is that these are the stocks that aren't focused on politics. They're not focused on trying to change the world pursuant to some leftist political agenda.
Like the good old days, right?
Or some conservative agenda, right? You're right, like the good old days. They're just focused on making a profit. And as you can see, from June of 30 of 2021 through January 31st of 2023 this year, they're the only, in this group, they're the only ones with positive performance. This is 220 stocks out of the S&P 900 and that are rated neutral. And they outperformed the S&P 500, the Russell 1000, and every one of these ESG funds. These are the 5 major ESG funds are in red. And as you can see, they've very negatively performed. Only one of these funds outperformed the Russell 1000, and none of them outperformed the S&P 500. Now, the S&P 500 and the Russell 1000 include ESG stocks and all other stocks. There's a lot of ESG stocks in both those indexes, but they include other stocks as well. And you can see just by including other stocks other than the ESG stocks, you outperform. If you take out all of the politically active stocks and just focus on the neutral stocks, you get substantial outperformance. And the lesson here, I like to say, is that companies focused on profits will outperform companies that don't. And I don't know how much more simply you could say that. I mean, I tell you, as a CEO of a company that of a publicly traded company than a privately held company. It's hard enough to make a profit when you focus on it,
right?
Let alone when you're focused on trying to change the world pursuant to some leftist political agenda.
Right.
And to kind of make your point from earlier about it used to be that everybody was focused on profits. What this chart does, this second chart, is the blue line is the 220 stocks that were rated neutral in the period from June 30, 2021 through January 31, 2023. Now, we don't have the data on whether those stocks were neutral going back, but stocks haven't been becoming more neutral. They've been becoming more ESG,
right.
more political.
Because of the pressure.
Right. So I think if we compare these 220 currently neutral stocks to the market, to the S&P 500 and the Russell 1000, going back 10 years, we can kind of see how neutral stocks perform versus the market. And you can see here that up until about 2016, 17, when ESG started to become a thing, when Larry Fink went out and said, we need to focus on more than profits, you can see they performed about the same, which is what you'd expect. Everybody was focused on profits. And then you can see beginning around 2017 or 18, that blue line of neutral stocks just excels, just shoots way up above the black line, which represents the S&P and the Russell, which perform relatively the same. And you can see a rise in performance on all stocks between around 2021 through 2022, 20. You've got stocks going straight up, no matter whether they're ESG or not. So the fact that some ESG stocks perform well during that period of time, well, everybody was performing well, but the neutral stocks were performing better. And the interesting thing is the black line includes the neutral stocks because it's the S&P 500 and the Russell 1000 are where those neutral stocks, we extracted them from there. If you took them out of the black line would go lower. So it's pretty clear from this, I believe, that, like I said, you focus on profits, you make profits. You focus on something else, you don't make profits.
And are you saying that the reason why these CEOs are moving in this ESG direction is because they're pressured by, the Larry Finks and BlackRocks and those larger institutions to move in that direction? Because wouldn't they want to run a company that actually functions?
You would think. It's hard to get in the head of 500 or 900 CEOs. Some of them probably believe this ESG. What's a nice word? Baloney.
Lie.
Yeah. Some of them probably, they may believe it, but some of them are being compelled to do this, and you have to wonder why. I mean, if you're a company like Disney, let's take Disney, right? Yeah. Disney appeals to families, right? And there are families across the country that are liberal. There are families across the country that are conservative. Why would you implement policies that offend half of your customer base?
Right.
If you want a lesson, something I learned as a CEO would be don't offend half your consumers.
Right.
And you'll probably do okay. I think Anheuser-Busch, although Anheuser-Busch didn't do this on purpose.
Well, they just did it again. I don't know if you've been following, but so they just did it again. So to say that they didn't do it on purpose at this point is unacceptable.
Good.
Right?
But why would you do that?
Why are they doing it?
I don't know. I'm dumbfounded. If you look at who would you rather be? The CEO at Disney that was fired, because the stock dived, they didn't get people signing up for their web service. They're making more money at their theme parks because they raised all the prices. You want to be the guy who got fired for misrunning the company at Disney, or you want to be the guy at Netflix who said, you don't like Dave Chappelle, we're going to give our customers what they want. If you don't like Dave Chappelle, you don't like us giving our customers what they want, then maybe you should work someplace else.
Right.
He's still got his job.
Right.
The guy at Disney's gone. And I think that's because investors want returns. Now, that doesn't mean that we're blind to the fact that there are problems in the world and things that should be addressed. In fact, there's absolutely nothing wrong with investing your money however you want to invest it. Let's say there was a solar power company, let's say it manufactured solar panels, and you invested in that company because you thought with all the government subsidies and the demand for green energy, this company is going to do pretty well. Well, there's nothing wrong with that. As a matter of fact, the pension fund trustee could invest in that company because it was going to generate returns. I'm not saying you have to be anti reducing carbon emissions. You can invest, if you believe the company is going to be profitable, invest in that company. What you can't do is invest in a company that makes solar panels because you think that over their life, solar energy is destructive to the environment. So you want this solar panel company to enter into a net zero solar by 2050 policy.
Right.
Then
bizarre.
then you shouldn't be investing in that company because you're not trying to advocate its success for the people's money you're investing. You're advocating its failure. Well, with Exxon, within 6 months of these individuals going on the board, guess what Exxon adopted? A net zero carbon emissions by 2050 policy. The largest oil company in the country, with these new directors, adopted a policy that basically says we shouldn't be in business.
Yeah.
So that none of this makes any economic sense. And I think that's why we've seen over this past couple of years this eruption of popular opposition to what's going on with ESG. And I think a lot of people like Larry Fink wish they'd never gotten involved in this. Vanguard, which is the second largest fund, their CEO has come out and said, you know what? This ESG stuff may not be consistent with our fiduciary duties. They've actually withdrew from an organization that was committed to this net zero carbon emissions policy and said, we're really not going to get involved in this anymore. So we have seen changes. And I saw an article where Larry Fink's looking for his successor. So I think the pressure
Maybe you should volunteer. Clean house.
I don't think there is a really good guy who could do. His name's Terrence Keeley, who was with BlackRock and gets this. He won't agree with everything I just said, but he's a good guy. He could step in. But I think it's having an effect, and so it's going to be tough though. The left is very well organized. They're very powerful. This World Economic Forum, it's a much scarier organization than people realize. It's something that it's really a collectivist group of people that really want to dominate the world. They think just as socialists throughout history, these people think they can run your life better than you can.
It's totally communism.
This country is life, liberty, and the pursuit of happiness. Those are all individual rights. That's not their thing. Their thing is, we're going to control it. We're going to make the decisions. We know better than you do. And we're going to use this ESG as a way to take the American private sector and use it again as a shortcut around the ballot box. We can avoid the messiness, the inconvenience of these election things, and we can implement our policies through this ESG investment criteria.
Right. Well, ESG is truly a Trojan horse into our freedoms and our businesses. And the other thing that they do, the left will manipulate language. So now they have this new language. It used to be shareholder capitalism or shareholders' interest, versus now they're using this new term, stakeholders capitalism or stakeholders' interest. Right? Like, what does that even mean? So can you explain that, and how are we being manipulated through that language?
I have a little bit different theory on that. I think that stakeholder capitalism was an attempt by some CEOs to try and make it look like they were doing something to make Larry Fink and the group happy. Because stakeholder capitalism is mean. It doesn't really mean anything, and I'll tell you why I think that. There's two things: stakeholder capitalism and shareholder capitalism. Stakeholder capitalism, the objective is we're going to address the issues of these other groups. Like we have, it's not just shareholders anymore. Now we've got to address the interests of our customers, our employees, our suppliers, and our community. In the Business Roundtable came out and said that those are the stakeholders that we're now going to focus on, right? Well, let's say you're the CEO of a company and you want to advance the shareholders' interest, right? What idiot CEO wouldn't advance the interest of his customers? I mean, obviously, if you're a CEO, you have to look to the interest of your customers. How about your employees? Well, they're your most important asset. If you don't pay attention to your employees, you're going to go out of business because they're going to go work for your competitors. The suppliers, if you don't pay attention to your suppliers will supply your competitors. And in a pandemic, that can be a problem. And every CEO knows you have to be liked in your community. So what they're really saying is we're not going to focus on returns for shareholders. We're not going to focus on shareholders. We're going to focus on the stakeholders that generate returns for shareholders. It's really a nonsense type thing. It's almost meaningless because the things they say they're going to focus on are the things you have to focus on if you're going to generate returns for shareholders. So I think stakeholder capitalism is a ruse. In matter of fact, it was what got me into it. It's why I was one of the, not the first, but one of the original people that kind of was looking at this. There was you, there was Steve Sukup, there was Vivek Ramaswamy. We were all sort of going, hey, something's kind of fishy here.
Yeah.
I got into this because I was asked to do an online debate by Orrin Cass at American Compass. And he had me debate a professor from Notre Dame, Patrick Deneen, who is a advocate of stakeholder capitalism. And I said, sure, I'll do it, but I don't think it's serious. I don't think there really is a thing at stake. I think it's kind of a ruse. And we debated, and I left the debate realizing that, that there were people that were serious about this. I mean, they did try, but I couldn't figure out why.
Right.
And that's looking into it more. I discovered ESG investing was really kind of what was pushing people to try and look like they were no longer just focused on the thing they were hired to focus on, which was returns for investors. They were now going to focus on this other stuff.
Right. Well, I mean, they're both just a slippery fish. It's the same thing as the S in socially governed. Well, what does that actually mean? You can't really grasp what the expectations are, right?
No.
Well, how do you serve all the stakeholders? Like, you just do a good job and everybody benefits, right? But once you have that S in socially governed, well, that's constantly changing, because apparently serving our customer means whatever woke thing is going on TikTok yesterday, right? And so that's, I think, part of that issue. It's interesting because you mentioned that there's been pushback against these funds, and specifically people who have a vested interest in these funds, where they're seeing losses and they're seeing additional issues with the ESG being implemented in funds that people have invested already, and terms are changing on them, which really brings me back to this document here that was signed about a year ago by 19 attorneys general. And I'd love for you to explain, what are they asking for and who was this written?
So this was a letter that was written to Larry Fink at BlackRock. And the objective was for these 19 attorneys general to tell him that investing along ESG criteria lines, particularly when it comes to not investing in oil and gas, in fossil fuels, violated the fiduciary rules, the fiduciary duties under the law of their respective states.
And what ended up happening with this letter?
BlackRock began to change policies. BlackRock did respond to this. I don't believe any lawsuits have grown out of this letter as yet. But there may be some soon. I actually drafted a law back in late 2021. I think the first state that I showed it to was Florida, and they've now passed a law that contains part of this. But it was a law that took the language of the Employee Retirement Income Security Act on protecting beneficiaries of funds, and took the regulation that Gene Scalia got passed on ESG is inconsistent with that obligation, turned it into a state law. The Heritage Foundation and the American Legislative Exchange Council, ALEC, adopted its model legislation with changes. People improved it. And now 20% of the states in this country have adopted that law over this past year. And we expect that to go up to 25% this year. And it could well be more going forward. We intend to keep pushing it. So there are now state laws that specifically state you can't invest state pension fund money in pursuant to these ESG criteria. And they also talk about proxy voting, so you won't have the kind of problem we had with Exxon. The second interesting thing that happened is Gene Scalia, the former Secretary of Labor, filed a lawsuit in New York against the pension funds in New York City, particularly the controller of New York City, claiming that by excluding investment in fossil fuels, they have not complied with their fiduciary duty to represent the interest of the beneficiaries of those funds. And there's now a very interesting lawsuit. If you can pull it offline, it's worth reading if you're interested in this.
So interesting.
Gene Scalia's team did a great job drafting this complaint. He's a brilliant guy. So those things. So we have some aggressive action in that respect. What we need to see from the attorneys general is if they don't get responses from BlackRock that are consistent with the requirements of either the statutory law or common law, which which exists in many states even that haven't passed an ESG statute. If what BlackRock, State Street, Vanguard, is doing isn't consistent with the legal requirements to protect the interest of pension fund and 401k beneficiaries in their states, they are probably going to end up moving towards litigation and looking towards holding some of these trustees and other fiduciaries liable for not adequately or properly investing, particularly state funds. California now, I hear, there's been some complaints within the investment community, the trustees of pension funds in California saying, maybe we need to invest in oil and gas. It gets a pretty good return because I think the pension funds are grossly underfunded.
Right.
And so we're hearing from a lot of different places that this switch to ESG is not in the interest of the people who these trustees and fiduciaries represent, and people aren't going to put up with it.
I was switching the subject a little bit. Can I ask you a personal question?
Sure.
I guess you need to hear what the question is yet, right? A lot of folks like you who've done well financially go buy a couple of vacation homes, grab a few boxes of bottles of wine, and they just, sail into the sunset. And politics is, you would know, it's just it's such a dirty world.
Yes.
And even just stepping into the arena in the conservative conversation is very difficult. We're all attacked all the time. Why are you doing this? Why are you not like some of these other friends of yours who have, are sitting there on their porch drinking their glass of wine and relaxing?
Ronald Reagan said back in 1977, that's the earliest that I've heard that he said it. He said that freedom was always but one generation away from extinction. Mm-hmm. And once we lose it, it's gone forever. I've got kids and grandkids, and I want to make sure that they have the kind of opportunities that I had. I also want to make sure that people like me that grew up working class and have a vision that they'd like to lift themselves out of the working class actually have the opportunity to do so. I think the kind of world that the World Economic Forum and these other socialists envision is a world where lifting yourself from one class to another, from the working class to another class, is something that either shouldn't occur to people, or if it does, it should seem like an impossible task. And I think people like me who have done this, I don't know if we have an obligation to stand up, but I think we should stand up. Mm-hmm. I think we should say, look, this works. The capitalist system has lifted billions of people out of poverty. Don't take it from me. Barack Obama said it in 2015. He said that capitalism has created more wealth than any economic system in history and has lifted billions of people out of poverty. Do we have an obligation to defend a system that lifts billions of people out of poverty? I would think we do. I think as humans living on this planet, we have an obligation to see we don't slip back into the situation prior to 1820, where back in 1820, 90% of the people in the world, according to the World Bank, lived in extreme poverty. That's 9 out of every 10 people. And if you just make it poverty, it goes to 94%. And if you don't think that happened in civilized countries, read a Dickens book. Great Britain was a very powerful country economically at the time Dickens was writing, and poverty was extreme and everywhere. Well, that number's come down. Prior to the pandemic, it was down around 8%. Now it's down around 9%. And that happened because of capitalism, because of the free market, because of individual rights, because we don't trust our futures to these economic or political experts who think they can run our lives. We trust our futures to our fellow men and fellow women. It's the invisible hand of Adam Smith. It's right. You and me voting what the direction of the economy is. We all make these millions of people collectively making these incredible decisions in this complex economic system, and that works. If you think that experts making those decisions work, I would remind you of the former Soviet Union, Cuba, Venezuela, North Korea, these countries where the elite have taken over and really destroyed the countries, destroyed their economies. Now, China has implemented something called red capitalism. They actually discovered that when they gave people a little economic freedom, it made a big difference. But every time they try and pull back on that, they try and impose more government, their economy goes down. So the experiment long-term in China, that we've yet to see the results of it. It's better than it used to be. But if they go back to their, and I think Xi Jinping has a tendency to want to run things. If that's the way they go, we're not going to see China do very well. But capitalism dramatically eliminates poverty. And I think we're all obligated to try and make sure that opportunity, the reduction of poverty, and the creation of wealth continues.
There are many CEOs that I'll speak with who are current CEOs, and they agree with you, but they say to me something like, look, what Andy's doing is great, but he's retired. It's a lot easier for him. I'm currently running a business. I don't have the time to deal with it. I can't deal with, my stakeholders, my employees. They're going to be upset with me. Maybe when I retire like Andy, I'll step into the arena. But right now, I just can't do it. And, I want to come in without judgment because I'm in the business of ideas. I'm in the business of saving America. And so I don't want to necessarily judge them for not stepping in. But I do think that they have a tremendous impact on the direction that America is headed. When you run a business, you have an impact on your employees, all your stakeholders, right? And so it's hard for me to really come into this conversation without judgment and say, well, is there anything you can do at all? And I'm wondering, what are your thoughts? If you were a current CEO right now, would you risk your business in order to save America? Is it fair to expect these business owners to speak out? And what responsibility do they have?
When I was CEO, I did a lot of writing for the Wall Street Journal, and I went on Fox a lot, talking about the destructive power of grossly increasing the minimum wage, about Obamacare and the dangers I thought that it posed. You can do it. But you have to be careful about how you do it. Now, could I do it today? I don't know. It would be very difficult for me to run a company today because I'd have to say what the Netflix guy said, which is if you don't want to work here, don't work here. We're going to be focused on profitability and moving the company forward. And if I lose my job, I lose my job. And it is easy for me to say that now because I'm retired. But Elon Musk just said the same thing. He said, look, I'm going to say what I want to say. I'm going to defend the First Amendment. And if it costs me money, it costs me money. But there's a higher objective here. There's a higher good here. There's a higher value here. And people aren't required to do this. You can live like Jeff Bezos. Jeff Bezos he became the wealthiest man in the world. He became tremendously wealthy, but not because he stole from us. He became tremendously wealthy because he created the greatest distribution system in the history of the world and tremendously benefited us. So we've gotten the benefits of what he's done. If he doesn't want to go out and defend the system that made it possible for him to do that, that's his call. But I have to have more respect for somebody like an Elon Musk who's out there defending individuality, defending creativity, defending our liberty, defending our rights. And you find this, I don't know if you found this, but I find immigrants have a greater respect for what we have in this country.
Well, they have an appreciation, right?
Than people who were born here. In many cases, that's not always the case, but in many cases. And I think Elon Musk falls into that. And thank God for people like Elon Musk.
Right.
I think there are people who need to stand up. I think it is possible to stand up. I did do it when I was a CEO and took some heat for it. Although I will say whenever I was criticized in the press or on TV, our sales went up. So it was
that's good attention.
Well, a lot of it's who your customer base is. Our customer base wasn't tree huggers or environmentalists.
Right.
They were out there eating burgers and stuff, right?
Right.
Now, if I was running Patagonia or Starbucks, or Nike,
right.
I might have to say kind of leftist political things if that's the company I wanted to run. Now, I probably couldn't run a company like that.
Right.
While I can relate my experience and my beliefs based on that experience, I think it's important that I do so because, kids are being fed a lot of, again, I have to look for a lot of BS. And stuff that just isn't true, true. And we have to do what we can to prevent that.
Well, thank you for enlisting into the fight and helping us out.
Well, thanks for PragerU. You guys are great. This is the best way to reach kids. You and YAF, I think, Young America's Foundation. I think you guys are how we reach that young group. And Daily Wire. there's these groups that
a lot
we
of
reach
good
kids.
fighters.
But you guys reach young Americans, and that's incredibly important.
Well, thank you for supporting us, Andy. It's great. It was a great conversation. We'll have to bring you back and keep tracking our economy.
Sounds great, Marissa. Thank you very much for having me.